Let me know if you hear me. Chat. I haven't used this in a while, so I need you guys to tell me if I'm coming through or if there's something wrong. All right, but like seriously tell me if you can hear me or not. Like we hear you, you know? Perfect. Okay, now hmm. There we go. All right, you don't hear the elevator music. I literally got I had to like edit out the elevator music last time because they demonetized the whole hour-long thing because like I had 30 seconds of the stupid elevator music in the stream last time. It was so dumb. So if there's no elevator music happening, that's good. I need you to tell me that.
Participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions.
All right, tell me if
To
you hear
ask a
the
question, you may press
guy
star then
talking.
1 on your touch-tone phone. And to withdraw your question, please press star then 2. Please limit yourself to one question and one follow-up. And if you have further questions,
And
you may
yes,
re-enter
now
the
that it's
question
starting,
queue. Today's call is scheduled for 60 minutes. Please note this event is also being recorded. I would now like to turn the conference over to Mr. Charles Lambert. Please go ahead.
Thank you and good morning. Welcome to the Medical Properties Trust conference call to discuss our first quarter 2024 financial results. With me today are Edward K. Aldag Jr., Chairman, President, and Chief Executive Officer of the company, Stephen Hamner, Executive Vice President and Chief Financial Officer, Kevin Hanna, Senior Vice President, Controller, and Chief Accounting Officer, and Rosa Hooper, Senior Vice President of Operations and Secretary. Our press release was distributed this morning and furnished on Form 8-K with the Securities and Exchange Commission. If you did not receive a copy, it is available on our website at medicalpropertiestrust.com in the Investor Relations section. Additionally, we're hosting a live webcast of today's call, which you can access in that same section. During the course of this call, we will make projections and certain other statements that may be considered forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These forward-looking statements are subject to known and unknown risks, uncertainties,
you do hear them
and
talking,
other factors that may cause our financial results and future events to differ materially from those expressed in or underlying such forward-looking statements. We refer you to the company's reports filed with the Securities and Exchange Commission for a discussion of the factors that could cause the company's actual results or future events to differ materially.
Honestly,
from
I'm
those
terrible at
expressed
kicking
in
around
this
with these
call.
studio things and stuff.
The information being provided today is as of this date only, and except as required by the federal securities laws, The company does not undertake a duty to update any such
So this
information.
is all that preamble stuff
In addition,
that I
during the course of the
talking about,
conference
and the
call, we
reason
will
I
describe
usually
certain
do
non-GAAP financial measures,
like
which
a
should be
short
considered in
summary
addition
video
to
later,
and not
because
in lieu of
this
comparable
is
GAAP
not
financial measures.
really all
Please
that.
note that in our press release, Medical Properties Trust has reconciled all non-GAAP financial measures to the most directly comparable GAAP measures in accordance with Reg G requirements. You can also refer to our website at medicalpropertiestrust.com for the most directly comparable financial measures and related reconciliations. I will now turn the call over to our Chief Executive Officer, Ed Aldag.
All right, Ed.
Thank you, Charles, and thanks to all of you for joining us this morning on our first quarter 2024 earnings call. I'm pleased to be joined again today by Steve Hamner, Rosa Hooper, and Kevin Hanna. You will hear from each of them shortly. For the past several quarters, you've heard me say that we're focused on executing a capital allocation strategy to generate at least $2 billion of additional liquidity in 2024. I'm pleased to share that we've made strong progress on this strategy, executing $1.6 billion of total liquidity transactions this year, including the recently announced sale of 75% of our interest in 5 Utah hospitals to a new joint venture with a leading multi-billion-dollar asset manager. We've used the proceeds from these transactions to pay down near-term debt, including full repayment of our Australian term loan that was due in 2024. Importantly, while we've already reached 80% of our initial liquidity target, we're just getting started.
Ooh.
And now expect to exceed that amount for the year. Our early results prove there's strong demand for our assets at attractive valuations.
Mm-hmm.
We have several available levers to generate additional liquidity, and we remain actively engaged in numerous discussions. As with the transactions already executed, we expect to continue demonstrating the value and cash flow potential embedded in our portfolio throughout the year.
So far, this is all stuff we've
Turning
known.
to Steward and his decision earlier this week to commence a Chapter 11 restructuring process. There has obviously been a great deal of media attention on this filing, and we want to take a few minutes to share our perspective directly with all of you. First, if you've had an opportunity to read through the first day declarations that Steward filed with the U.S. Bankruptcy Court, you will find a clear story of how Steward got here. Notably, no mention was made of rent as a contributor to Steward's distress. We believe that bankruptcy will facilitate the re-tenanting or sale of Steward hospitals in an orderly and timely fashion.
That's actually a good
point. We
point.
firmly believe that an orderly transition of Steward hospitals to new operators is in the best interest of everyone, and we're committed to providing a $75 million in DIP financing to help achieve that. We expect Steward to use this financing to ensure continuity of patient care while accelerating the re-tenanting of its hospitals. To be clear, we have not committed to providing any additional funding beyond this initial $75 million. As I said before, rent is never mentioned by Steward on the list of contributing factors to its financial stress. That's because rent, which represents only a small fraction of a hospital's total revenue, is virtually never the primary cause of financial stress for hospitals. And if Steward wasn't paying rent, they'd be paying interest and principal repayments on some type of financing for the facilities, because as we all know, buildings are not free. While we've seen a great deal of misinformation recently reported about our business model, the fact remains that MPT provides hospital operators permanent and affordable capital, enabling them to redirect the substantial cash resources that would otherwise be used for real estate to their primary mission, healing patients. We continue to be pleased with the progress we are making with parties interested in the Steward hospitals. It would be inappropriate for us to discuss the details of each of these transactions until they are approved by the court. I will now turn it over to Rosa to discuss the performance of our portfolio.
The money comes with major strings attached from
As with the past few quarters, I'll take you through some of the highlights across our portfolio of critical hospital real estate.
MPW doesn't give out the money for nothing.
Comments. During the fourth quarter of 2023, We were pleased with the solid sequential and year-over-year coverage improvements delivered across our portfolio. In fact, on a discrete quarter-over-quarter sequential basis, our general acute, inpatient rehab, and LTAC segments all reported increasing coverage in the fourth quarter. And during the first quarter of 2024, volume trends across our portfolio, excluding Steward and Prospect, grew in line with, and in some cases, outpaced the growth of large public operators. Behavioral health hospitals, which represent 14% of our portfolfolio, continue to see increasing volumes year over year as these facilities prove their enduring value in their respective communities. While LTACs have seen declining year-over-year volumes as a result of the CMS waiver expiration last May, it is worth noting that these facilities represent just 1.5% of our portfolio and are generally part of larger operators that include inpatient rehab and or acute care hospitals, therefore ensuring diversification and additional coverage for ongoing rent payments. Going forward, we will no longer provide individual disclosure of LTAC coverages, but will instead begin to combine them with inpatient rehab coverages for a post-acute property type. In the UK and continental Europe, operators continue to benefit from strong growth in reimbursement rates, overall volumes, and higher acuity admissions, leading most operators to report increasing operating profits year over year. Circle remains well-positioned in the UK private healthcare market with steady volume growth and increasing patient acuity that is expected to extend through 2024. With the sustained growth of private health insurance coverage and self-pay in the UK, Circle has delivered steady financial performance.
That's crazy to me that private is actually growing in the UK when they have the NHS.
As the largest independent mental health care provider in the UK by number of beds, Priory continues to capitalize on increased demand for behavioral health services within the UK. They are seeing steadily improving reimbursement trends along with stable occupancy levels and remain focused on cost-effective management to ensure quality and efficient care. Together, these focus areas are driving incremental improvements in coverage and earnings. Priory's parent company, Median, has largely recovered from the impacts of the COVID-19 pandemic on its German operations, with improving occupancy, favorable reimbursement rates, moderating inflation, and strong cost controls. Median's operating margins have proven resilient over the past several years, and we expect them to maintain that stability. While Swiss Medical's profitability was marginally impacted by inflationary pressures and investments related to its pioneering integrated care network in 2023, initial results from the first quarter already indicate that these temporary headwinds are abating. In addition, Swiss Medical's Genolier Innovation Hub, which began construction in 2021, remains on track to open in the second half of 2024. Turning to our U.S. portfolio, excluding Steward and Prospect, we're seeing increasing admissions almost universally across our diversified portfolio of general acute hospitals, inpatient rehabilitation facilities for IRFs, and behavioral health facilities.
Medicare and Medicaid
reimbursement rates are generally accelerating, and operators are doing a commendable job of controlling costs in this inflationary environment.
What we do in the U.S. is
a major highlight for the quarter was the announcement of the new JV we formed with a leading investment firm involving our hospitals in the Salt Lake City area of Utah, operated by Common Spirit. We are pleased to retain an approximate 25% interest in these facilities and expect strong performance trends to persist over the long term. Ernest Health reported stable performance with consolidated EBITDARM coverage above 2 times. Ernest's IRFs are performing well with coverage in excess of 2 times on their same store IRFs, excluding Ernest's 3 recent developments. it is approaching 3 times. Ernest's total reported coverage was adversely impacted at its LTAC facilities by the volume headwinds I mentioned earlier. As an important reminder, LTACs comprise less than 20% of our investment in Ernest, and their rent is more than covered by the IRFs. Shifting to Prime, as part of the California and New Jersey sale transaction, MPT and Prime agreed to a new 20-year master lease for our remaining 4 Prime hospitals. The new master lease includes a purchase option for Prime to buy the real estate of these remaining hospitals for a minimum purchase price of $238 million. They report increasing volumes and normalization of labor costs, which has led to improved EBITDARM for MPT-owned hospitals. At our LifePoint hospitals, volumes have sustained momentum following the nice rebound we saw in the fourth quarter of 2023. As a result, MPT-owned LifePoint facilities have delivered meaningful EBITDARM improvements over the last several months, including an encouraging March in which they delivered the highest monthly EBITDARM in more than 2 years. LifePoint's recently dedicated cardiovascular and surgical care pavilion at Conemaugh Memorial in Pennsylvania has been very well received by the community, and we remain optimistic that it will further position that market for future success. Our LifePoint behavioral facilities inpatient volumes have steadily increased, offsetting seasonal declines in volumes from partial hospitalization programs and intensive outpatient programs. At Scion Health, general acute facilities reported nearly a full-turn improvement in coverage year over year to 1.9 times, driven by double-digit volume increases and substantial reductions in contract labor. However, like Ernest, LTAC performance has been adversely impacted
revenue for
by the
their
waivers that
stabilized
expired in
portfolio, so you know they can
2023.
keep paying the
Finally,
increased rent every
Prospect
year.
paid cash rent and interest of approximately $7 million during the quarter and reported EBITDARM coverage of approximately 1 times on its California portfolio for the 12 months ended December 31, 2023. Coverage has further increased to approximately 1.3 times on a trailing 12-month basis through the end of February. Prospect paid March rent for California after the end of the quarter. However, at this time, MPT has not yet received rent for the months of April and May. To briefly summarize before I turn it over to Kevin, the majority of operators in our highly diversified portfolio continue to perform well, and we're encouraged by the volume and cost trends we're seeing across geographies and care settings. As such, we remain confident in the core pillars of our business model and the long-term cash flow potential of our portfolio. Kevin?
Thank you, Rosa. This morning, we reported a GAAP net loss of $1.23 per share and normalized FFO of 24 cents per share for the first quarter of 2024.
That's a good point.
As mentioned in our earnings release, first quarter results include approximately $18 million of consolidated cash revenue from Steward and Prospect.
I guess that's why they have them on cash
Steward
basis
additionally
accounting
continue to
along
make
with
full
Steward.
payments as it relates to the Massachusetts partnership portfolio, about $19 million in the first quarter at MPT share. Subsequent to quarter end, Steward has paid $9.5 million in rent, half of which is MPT share, and Prospect has paid roughly $7 million. We also described approximately $693 million in non-cash impairments recorded in the quarter, primarily related to non-real estate investments in Steward and the international joint venture. These charges were estimated and reported pursuant to U.S. GAAP accounting rules and reflect conservative assumptions regarding potential recoveries, which MPT remains committed to pursuing.
They were
as was the case
projected
last quarter, investments in the operations of Steward and the investment in the operations of the international joint venture were evaluated with assistance of a third party independent appraiser. The first quarter charges included the full impairment of MPT's approximately $360 million loan to Steward made in 2021, the remainder of its equity investment in Steward, and other obligations. Further, we impaired our full investment in the international joint venture. As a reminder, these investments were previously moved to cash basis accounting and no related income was recorded in the first quarter. It is worth noting a couple other adjustments to normalize FFO. First, we adjusted the book value of our investment in PHP Holdings downward by approximately $60 million based on the most recent third-party independent appraisal. Further, we recognized an approximate $8 million loss on our sale of the priority term loan, as well as an $8 million negative adjustment to the fair value of marketable securities, such as our shares in EVIS. One thought before I hand it over to Steve, we remind investors in advance of our 10-Q filing that first quarter cash flows from operations is typically influenced negatively by the timing of cash interest payments on our debt. Assuming no impact from transactions or Steward re-tenanting activity, we would expect 2024 cash flow from operations to be seasonally weighted to the back half of the year. With that, I will turn it over to Steve for a discussion of liquidity and our overall capital allocation strategy. Steve?
Thank you, Kevin. I'll begin by echoing Ed's earlier comments about the success of the liquidity plan we described late last year, which is working even better than we predicted. At that time, we estimated that during all of 2024, we would generate $2 billion from asset sales and secured financing. By halfway through April, we had achieved $1.6 billion, or 80% of the initial estimate. And those transactions were executed during a particularly volatile period in terms of inflation and interest rates. Based on those early successes, we believe we will exceed our $2 billion target for 2024 with additional transactions at attractive valuations and capitalization rates well inside of what our public securities imply. Going back a bit further, MPT has reduced its net debt by $1.6 billion since this time last year. We've accomplished this delevering primarily with about $2.4 billion of proceeds from profitable asset sales, including completely exiting Australia, selling hospitals back to operators pursuant to their repurchase options, and most recently our sale of 75% of our Utah facilities for almost $900 million of cash proceeds. And that does not include the $190 million of non-recourse financing proceeds. As a side note, this Utah transaction fully validates the price we paid for these hospitals in 2020 when they were operated by Steward. We're pleased to retain a 25% interest, which provides us the opportunity to participate in any future increases in the values of these assets.
Right now.
We currently have about $900 million in immediately available liquidity through cash balances and revolver capacity. Planned uses for this current liquidity, as well as future operating cash flows and any proceeds from potential additional transactions, include up to $75 million for the Steward debtor in possession loan. And as Ed mentioned, we have made no commitment to fund any more than that. Repayment of 100 million pounds, that's about $130 million in a sterling-denominated seller financing loan due late this year.
Dang.
And prepayment of approximately another 105 million pounds, or another roughly $130 million, related to our sterling-denominated term loan. And up to about $230 million in development commitments, including 2 projects that may be sold, so the actual amount of that funding is uncertain.
Click that.
Partly in recognition of our success in selling assets at attractive valuations, and also in light of the deteriorating Steward situation prior to its bankruptcy filing, we recently amended our bank facility.
Guess I'll have to do some members-only stuff.
One of our bank loan financial covenants limits the amount of unsecured debt as a percentage of unencumbered assets to 65%. For that calculation, the amount of unencumbered assets leased to tenants in bankruptcy is limited to 10%. The bank group agreed to waive this 10% limitation through the quarterly June 30 test, which means that, all else equal, Steward assets will remain in the unencumbered asset calculation for financial covenants until the next quarterly test on September 30. Our plan and expectation are that during the 5 months until September 30, we will replace Steward with better qualified operators at many of our hospitals that are currently leased to Steward, so that even if Steward remains in bankruptcy at that time and the waiver is not extended, Its effect on our unencumbered asset value-based financial covenant is expected to be mitigated. Second, given our current priorities and the liquidity generated from asset sales and financing transactions already executed and expected in the future, we no longer need the large $1.8 billion revolving credit facility that we had during earlier years when our acquisitions exceeded $3+ billion annually. Accordingly, we offered to reduce the revolver commitment by $400 million down to $1.4 billion. Further, because the majority of these liquidity transactions are expected to be sales rather than secured financings, we project relatively low levels of secured borrowings for the foreseeable future, and accordingly, we were willing to reduce our secured debt basket from 40% down to 25%. Before going to questions, I'll just summarize and point out we have addressed all our 2024 maturities. We have only the 100 million pound sterling mortgage remaining to be paid, and we expect to have significant liquidity going into 2025, and that's before considering the possible liquidity that we expect to achieve from the additional transactions that I've alluded to.
Memberships, guys.
Our plans remain to continue to monetize assets, increase liquidity, and reduce debt, and re-tenant hospital real estate that is currently leased to Steward. And with that, I will turn it over for questions. Operator.
Thank you. We will now begin the question and answer session. To ask a question, you may press star then one on your touch-tone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star then two. Again, please limit yourself to one question and one follow-up. And if you have further questions, you may re-enter the question queue. And at this time, we'll pause momentarily to assemble our roster. And the first question will come from Austin Wurschmidt with KeyBanc Capital Markets. Please go ahead.
Hey, good morning, everybody. First, just wondering if all of the facilities leased to Steward are open and operating, and whether you expect that will remain the case. And just wondering if you're still receiving the weekly cash flow reports from Steward's advisors, and just any changes for better or worse there.
So, Austin, all of the facilities, other than the ones that were previously closed prior to bankruptcy, continue to be operating. And in the second question, we do continue to receive cash flow reports from Steward's advisors, and they have so far exceeded their projections on, I believe, every week.
So as you start negotiations or have been in negotiations with other parties to backfill the operations of these facilities, I mean, what's the thinking around, potential rent moving forward relative to Steward's prior contractual cash rent?
Good question.
So the hospitals, as we've been saying for many months, on a localized four walls perspective, are generating positive EBITDA. The issues with Steward, which are very well laid out in the bankruptcy filings, are around legacy payables, revenue cycle management, the level of revenue reimbursement. So all of that is to say that we believe that these hospitals can continue to pay rent at the contractual levels. Now, there's obviously a lot that goes into negotiation, and with bankruptcy, there's more scrutiny. But that's a long-winded way of saying we anticipate across the portfolio to continue to get at or near the amount of rent that the current lease agreements call for.
And then just last one for me, I guess, any sense on the timeline of when you could start to get any of these facilities back, or whether any of these leases will be, rejected for any reasons, either, for better or worse? And that's all for me. Thank you.
I'm sorry, I think your question was around the timeline, and I think, again, in the bankruptcy filings, there are some very strict target dates to have agreements in place that would then start the regulatory process.
I would sort of view today's results.
I won't get into bankruptcy law because I don't think many of us are lawyers on this call, but we have no indication that Steward would have any motivation in rejecting
By the way,
either of the two master leases.
if there's any of those memberships left, make sure you're claiming them, guys. It's free.
The next question will come from Joshua Dinnerline with Bank of America. Please go ahead.
Yeah, hey guys, thanks for the time. Just curious on the DIP financing. Why did you guys feel the need to provide the DIP financing? And then
that's a dumb question.
For the BK documents, just curious why it's called junior debt, and then what is it junior to?
Josh, the reason that we decided to do the $75 million DIP financing is exactly as I said in my prepared remarks, is that we think it's very important that the hospitals continue to operate as we go through this process.
Were there no other potential folks who would be willing to provide DIP financing in the BK?
Yeah, there absolutely were others. There are other lenders involved, as you know, but we're not going to get into the details of those negotiations at this point.
Okay. And then in the BK document, it was referred to as junior DIP financing. I think that's the correct term. Just curious, does that mean it's junior to other like debt or claims, or why was that term used?
Well, because of the security waterfall, and as you allude to, there are other lenders that have first liens on the typical collateral of receivables.
Okay. Correct me if I'm wrong, but I always thought DIP financing was like the most secure claim. Anyway, maybe on the PHP holdings write down, just could you kind of walk us through like what drove the fair market adjustment? Like what's driving that, and how does that potentially impact the potential monetization I think you guys have talked about in the past?
So actually, I think I know why.
It's based on, as we do every quarter, independent appraisals and evaluations of
because
a
there's
lot
some
of inputs,
financing
including things like discount rates,
secured against like Medicare, Medicaid
financing rates,
and I think that might.
So it's really on a private basis. I think, as Kevin described, like any other security that we value on a fair market basis. It's clearly an estimate,
factoring,
and it is not based on necessarily our expectation of what happens to PHP or when.
Oh dang!
Okay. So
we got somebody paying it forward.
Was it more based on
grab that free membership, guys,
or was there something that changed with like cash flows of the underlying investment?
Yeah, I think the biggest piece, as Steve alluded to, was the discount rate and some working capital adjustments as well, but mainly the discount rate.
All right. Appreciate the time. Thanks.
I think they did that to
as
Rob
a reminder,
once, and that's why I hate
please limit yourself to one question and one follow-up. Our next question will come from Vikram Malhotra with Mizuho. Please go ahead.
Hi, this is George on for Vikram. Can you just comment on Prospect? How should we think about the rent recovery there?
That's a good question.
The rent recovery, is that what?
Rent coverage?
Yes.
Oh.
Rent recovery.
Yeah, well, the rent recovery.
He said recovery.
Oh.
I think he's saying rent recovery.
Well, as Rosa pointed out, we have collected the rent on the California assets through March, but that March payment came subsequent to March, and as of now, we've not collected April or May.
March was late, and April and May have not been paid.
The quad payments are expected in the coming months, which will be a slug of cash for Prospect. So we would anticipate getting them having additional proceeds at that time.
Okay, that's helpful. And just, can you provide more color on the pricing of the dispositions that you did in April? And you mentioned you're likely to exceed the $2 billion target of liquidity.
I know, right?
How does this number look like today? And, what are your expectations?
Somebody needed to turn his hearing aid up.
So I think we mentioned this, and it's a good question, last quarter with respect to the prime assets that we sold, which we calculated a mid-sevens cap rate. And we said that the negotiations we were undergoing at that time, and frankly, we remain, well, we closed one of those and we remain negotiating others. That cap rate in the mid sevens plus or minus is very indicative when adjusted for geography and size and,
I think you've got a good
quality of
point
assets to what we expect to achieve on the additional sales or financings that we have mentioned.
If they stop operating and start falling apart,
and just how large do you think the
that makes it
pipeline
really
would
hard
be? Like
for them to re-tenant
how much
them,
above
I
the
would
2
imagine.
billion? If you can provide more color, that would be super helpful.
Well, you're breaking up a little bit, but if I heard you correctly, of course, we've already achieved 80% of the $2 billion. And based on those results and our visibility into the market, into potential buyers and financing sources, that's why we've said we think we'll ultimately exceed the $2 billion through the remainder of 2024, and we think it will be at similar pricing, attractive pricing for us.
I always feel a little bit disappointed with what the analysts ask.
The next question will come from Michael Carroll with RBC. Please go ahead.
Yep, thanks. Steve and Rosa, I wanted to circle back on the Prospect situation. I guess, how concerning is it that they haven't paid April and May rents? And I know, Rosa, you said that QAF payments are going to come in. I mean, does that fix their situation? And what month do those QAF payments come in?
So your question, how concerning is it? Of course, the Prospect's been on cash basis for some time. And as Rosa mentioned, I'll let her address the QAF in a minute, we've always had with our California operators this QAF issue. And then when you combine it with respect specifically to Prospect and delays in disposing of other regions in the country, they have significant cash pressures on them. But aside from that, having been paid through the quarter with the QAF issue, that again is not unexpected, we remain confident that ultimately, the cash will come in to pay the rent in California.
And California coverage continues to improve.
Those QAF payments are due at the end, or should come in by the end of this month, into May, and it's a substantial sum. It should really help them with their cash flow.
My coverage in February was almost a 1.3.
Yeah, I'm assuming though that what the Connecticut and Pennsylvania and maybe the Rhode Island assets are kind of weighing that down. As they are missing these rent payments, do they have other cash pressures that are making their position tighter? I guess, does missing these rent payments in April and May solve their cash issues, or are they falling behind on other vendor payables that they may have?
I don't think we have a comment on that. We expect to get our rent, and they're operating at a level. And again, Ed's mentioned the very positively improving coverage. Now you have to convert that coverage to cash, and that's what we expect comes in with the QAF.
Okay. And then just finally, Steve, can you talk a little bit about what you're expecting for the Steward transitions? I know you said in your prepared remarks that you didn't need the 10% BK covenant test in September because you expected transitions to occur. Do you expect a portion of transitions to occur? And I did look at the BK filing saying that it expects some of this stuff to get done by the beginning of August. I mean, I'm assuming for this to get done by the beginning of August, you would need to have a lot of process already underway. I mean, can you comment on how much interest there are in those hospitals right now? And are people looking at the financials to get ready to put in bids, or is that process just starting?
It'd be nice if they could speak plainly about it.
Well, Mike, it's been going on for almost 5 months now. We're way down the road with many different people.
And then, Steve, your comment on the 10% BK covenant was that do you expect a percentage of the Steward hospitals to be transitioned, or can you kind of clarify that comment?
Well, I'll try to clarify. I won't try to predict. The point I was trying to make is if we need relief from that covenant at the end of September, we would expect that need, all else equal, to be substantially mitigated by the number of hospitals that move away from the Steward relationship into new relationships. Now, we don't try to predict exactly which hospitals will transition on which date, but between now and the end of this almost 5-month period, we do think that, again, based on what Ed just said, remember this didn't just start with the filing of bankruptcy. They've been marketing these hospitals for at least 5 or 6 months. But we do expect, without specifying which hospitals go when, we do expect that a meaningful amount of Steward exposure will be moved away to new operators before the end of September.
Always a good
Okay, great. Thank you.
And if there's still any free members,
The next question will come from Mike Mueller with JP Morgan. Please go ahead.
Yeah, hi. Maybe a couple quick ones here. I guess following up on the prior question, can you give us a high-level sense of, at the end of this process, what portion of Steward assets do you think you have now will ultimately be
makes sense, though,
managed by other operators, either by sold or transitioned or whatever?
Mike, I'm not sure I completely understand your question, but I think you said at the end of this transition, whenever it is, do we expect any of the facilities to continue to be operated by Steward? Is that the question?
Well, yeah. Let me rephrase it. I guess at the end of this bankruptcy process, at the other side of it, what portion of your Steward assets now do you think will be in the hands of other operators, as opposed to, being operated by Steward?
That's a forward-looking question.
I would guess close to 100%.
Okay. And then I guess as it relates to the recent news with Connecticut and Yale New Haven,
good question.
I guess can you give us current thoughts on what the plan B is there if those assets do not get sold?
Yeah, with the ongoing discussions between the state, Yale, and Prospect, we're just not going to comment on that right now.
Got it. Okay, thank you.
The next question will come from Jonathan Hughes with Raymond James. Please go ahead.
Hi, good morning.
Well, I'm not in it for the.
Are there
so
any
I feel a little
concerns or discussions with new potential operators for the Steward properties, focusing on increasing market share that might lead to concentration issues and maybe scrutiny from the FTC, or is it because Steward is in bankruptcy? The primary goal is to find a new operator and preserve healthcare services regardless of increased market share?
Yeah, Jonathan, it's a lot of different markets, so I can't be 100% accurate on this, but to the best of my recovery right this moment, I don't think there are any that would require a market concentration issue.
Okay. And then maybe my second question on the dividend. The last month's dividend was
they said at
declared
the
after
end
the
of the Chapter 11, when that process is all done,
with your prior comments,
they expect
that the dividend
near
dependent on
100%
liquidity transactions.
of
And that press release
Steward
mentioned that it was a regular
run
dividend,
hospitals to be
but
transitioned to
that
other
April dividend was
operators.
declared more than 5 months after the prior. So is it fair to assume future dividends
Which,
might also be
given
more
Steward's track record, I think
sporadic and maybe
maybe a
given the
good thing.
change in Steward's status since then and focus on preserving liquidity? Is the board still comfortable with that current dividend amount? Thanks.
Yeah, Jonathan, our next board meeting is the same day as our annual meeting, which I believe is May the 30th, and it'll be discussed at that point.
All right. I look forward to hearing more then. Thank you for the time.
The next question will come from John Pawlowski with Green Street. Please go ahead.
Thanks for the time. My first question is on the Utah transaction. The press release said $1.1 billion in proceeds prior to costs and reserves. Can you quantify what the costs and reserves are? And I imagine some of it's CapEx, so any additional color on the deferred CapEx in that portfolio and how it impacted the transaction?
I think they said it would be discussed then. I think they said that's when the board meets, but
well, the reference
we can read the
to
transcript
cost
later.
and reserves are just customary cost of a transaction, fees, brokerage, and typical reserves that a first lien lender may require. And I'm not quite sure I followed the follow-up question.
There was nothing extraordinary in those expenses as reserves.
No, that's my point. And I'm not sure what was meant by CapEx.
So there's no additional CapEx that MPW needs to fund to get that headline purchase price.
This is an absolute net lease.
A meeting or something. May 30th.
That the operator, Common Spirit, is responsible for CapEx.
Okay. Next question on Steward. So
that
with
makes
the
sense.
Macquarie
You're probably
JV,
taking the dividend quarter by quarter.
Just given
that
Steward's
should be
still
expected
paying rent on that
considering
JV, were MPW's lease payments due from Steward on either of your master leases with Steward subordinated to the JV when that was structured?
No.
Okay. Last question from me. Did you pledge any of your real estate as collateral in conjunction with the Steward ABL or bridge loan refinancing? And if so, how many assets have liens against them right now?
No.
All right. Thanks for the time.
No. I sounded annoyed by that question.
This concludes our question and answer session. I would like to turn the conference back over to Mr. Ed Aldag for any closing remarks. Please go ahead.
Thank you, Chuck, and we appreciate everyone listening today. If you have any additional questions, please don't hesitate to call Drew or Tim, and they'll get your questions responded to as quickly as we can. Thank you.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.
No. They gotta increase that dividend. Some yield max funds are over 100%. Oh, I should probably get rid of this audio. I'm probably gonna get copyrighted for this elevator music. I let about 8 seconds of it play. So yeah. No. Yeah, thanks. No. Right. So yeah, I mean, it's like if any of you have seen Chernobyl, it's like 3.6 Rontgen, not great, not terrible. It's kind of how I feel about it. until everybody starts dropping dead. Oh yeah, I mean, Guff coming in with the real takeaway from the conference call. Yeah. So I wasn't really expecting anything definitive about the dividend, so not really worried about that. A little bit concerned about Prospect, to be honest. They are saying like, oh, they'll get the money to pay soon. It's coming. It's coming. You never want to hear it's coming when it comes to the rent money. Yeah, I mean that's although their struggle, like they wouldn't be on cash basis accounting if everything was peachy with them. So like probably somewhat to be expected. And I guess they did fully pay March's rent, and that's when stuff was supposed to be kind of better, quote unquote, with them. And they seem to think that the rent's going to get paid out of this money they have coming and stuff, but like they haven't paid April yet. Although they did say March's rent came after March. So they probably paid March's rent in April. And as such, we'll probably pay April's rent in May at some point. Like, so they're like a few weeks, it seems like, behind, but paying is actually kind of what it seems like now that I think on it a little bit. Yeah, that's true. The problem is we already read through the bankruptcy stuff quite a bit. So we already kind of knew most of the stuff they discussed on this call. So very few pieces of new information for those of us that have been keeping up with the bankruptcy. Winter is coming, yeah. The dragons are coming. And winter. and George R.R. Martin's last Game of Thrones book. So, um, when it comes to Steward, I mean, yeah, like they got in a little too deep with them probably, but it seems like in the Chapter 11 they're going to be, as some people are saying, sort of chopping up the corpse, so to speak, and extracting their pound of flesh however they have to. And it actually seems like the Chapter 11 was pretty much, it seems very much like MPW wanted the Chapter 11. So, um, I won't know until we look at the actual, quarterly 10Q thing. But I do think they're probably okay on 2024 obligations. Uh, there's there's probably, there's probably a breakdown somewhere of each tenant and how much everything, like a table or something. And, when they do these conference calls, they sort of assume that you've been reading all of the material that they release and everything. So that's why it can be a little hard to follow if you're not doing all the reading. So, alright, at the time when Prospect first started, like, having issues paying rent, they were, I think, 3rd. So Steward was number 1, someone else that I can't remember is number 2, and then Prospect was number 3. But the only one that's, like, really, 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 uh, big on the tenant diversification is Steward themselves at that, um, like, near 20% or whatever. The other ones are all distant to Steward. Like, 2nd place is, like, a pretty distant 2nd, and Prospect, pretty distant 3rd, etcetera, from what I remember. Mm, good point. And I forget, well, actually, the Connecticut hospitals are also Prospect hospitals, and that whole Yale deal seems like it's, well, some people think that the judge is going to make them buy it and, you know, basically enforce the contract and stuff if it does go to court and everything, but who knows how long that'll take, I don't. Correct. So they indicated that they paid March, but that payment they said was subsequent to March, meaning they paid March, but the it was late. It was paid in April. Subsequent to means after, so they paid March's rent after March. So I would expect then that might mean that April's rent gets paid in May, May's rent maybe gets paid in late May or June, based on that information. So that might be kind of in line with just how they've been doing things the last few months. Well, yeah, they smell blood in the water, and so they're trying to, they're trying to squeeze Prospect because they're in a tough spot. Like, However, there is a signed contract, and it doesn't help that the state regulators in these eastern states take literal years to allow these transitions to happen. If they would have just approved it, within a reasonable time frame after the contract was signed, the deal would already be done, the cash would be in hand, and everybody would be on their way. So, yeah, definitely, like, I kind of hope MPT, like, avoids owning hospitals in these states going forward after they get rid of them, because it's like it's a shit show trying to do anything in the Northeast, it seems like. 6.3%, yeah. So distant, compared to Steward, but still, like, 6.3% is still, like, not nothing, right? So, yeah. I mean, the Chapter 11 seems like it's something MPT wanted, so, yeah. And the, Steward's headquarters being moved to Texas by the, CEO, Ralph, and his, famous for his yachts. Actually, being in Texas courts is probably an advantage for this, for MPT to get things that they want out of this deal. So, you know, you don't want the tenant in bankruptcy, but if they have to be in bankruptcy, better that it be in Texas, I suppose. Yeah, I mean, they play the cards pretty close to their vest on these calls. And yeah, they don't want to say anything that might cause like a massive sell off, because share price is important for REITs, and yeah, so that it makes sense that they would do that. And if they speak plainly, it'll just be ammunition on Fraser Paring's Twitter of "See, I told you." Sorry, I I don't know. I don't know how I could fix that right now, but thanks for letting me know. I mean, I think the disposition of the Steward assets over the course of this Chapter 11, I mean, that's damn near 20% of their total assets, and they're going to be retenanting them. And they stated the expectation is same or close to same rent levels after retenanting, and they expect nearly 100%. So, yeah, it seems like I think that will be helpful. And if I honestly wish they would have talked about the Optum, United Healthcare stewardship thing, that stalking horse offer a little bit, and maybe give us an idea of what that price is, because the stalking horse bid is sort of like the first bid that's meant to clear any low balls from the table, and that would kind of set like your minimum expectation for what stewardship would sell for, which can give you an idea of what, if anything, the creditors are, able to expect to get out of that, MPT being one of the major creditors there. So, yeah, it might just be it's probably lag in the actual like tab I'm using for StreamYard. Maybe I have too many tabs open. Inside buyers, huh? I don't know anything about that. Considering that this conference call wasn't particularly stellar, I'll take flat on the day, I guess. Honestly, when they announced it would, be results before opening and then the call in the middle of the trading day, I was kind of expecting maybe a little bit more, to be honest. But there you go. Yeah, the state of Massachusetts is garbage, but at this point, the alternative to allowing some of this stuff to go through is a bunch of hospitals close, a bunch of people lose their jobs, and a bunch of citizens don't have access to care. And, people on Medicare who go to these hospitals, they're old, because being on Medicare by definition means you're old. And old people vote, and the state is not unaware of that. So there's a lot of tough talk, but they know where their bread is buttered, I think. So yeah, I mean, we'll see. I was definitely I don't know. I was definitely hoping to hear about specifically the stewardship deal with Optum/UNH. That was kind of the thing I wanted to. I was really expecting to get for them to at least mention it or something, and yeah, it was mentioned all over the place in the bankruptcy filing, but they, yeah, I think they definitely dropped the ball by not at least kind of bringing it up, but. Well, it's not MPW that's bankrupt, it's Steward. And gosh, there's a giant document that a lot of us have read. If you're on Discord, we've read it and discussed it at length. So maybe, be on Discord if you're not already, I guess, is what I would tell you, because there have been hours upon hours of discussion in there on the bankruptcy and the dip financing, Steward's assets, MPW's level of seniority in the debt, and of course the Optum stalking horse offer, which it seems like stewardship is actually worth quite a lot of money, but we don't know still to this day what the bid was that Optum put in for that asset. And that is probably one of the more important things to know on this. So I would just advise you to be in the Discord if you want to be kept very up to date on all of that, because you won't hear from just me. There are people in the Discord that have literally hundreds of thousands of dollars individually invested here. I don't have nearly that much into this stock. It's a chunk, but it's not I'm not quote unquote all in like some people are. So yeah, that's exactly right. Steward hospitals need to be retenanted. Stewardship needs to get sold, Yale prospect deal closing would be nice, but that's probably going to be slower than we want. Yeah, exactly. These northeastern states are the biggest giant pain in the ass places to do business, pardon my French. I would never want to live there, let alone try to do business there, with the exception of Delaware, which is basically tailor-made for corporations to do business. Yeah, that's a problem with like negotiations that are in process. They don't they don't benefit from saying what's going on until they've actually got something like signed and like ready to close, basically. Like Utah, we were surprised by that, like how good it looked. And probably if they had talked about it a bunch beforehand, you know, yeah, maybe it wouldn't have had the same effect. And they also, I think with anything good that comes up, they don't want to get people's hopes up too much. And then, if it doesn't go through, like have to suffer through the giant sell off that happens if it disappoints. But if they surprise us to the upside, like with Utah, what happened to the stock price the day that got announced? It seems like a lot of what they're doing is sort of maybe somewhat designed to counteract or try to punish shorts, because the stock's really volatile. So like a surprise piece of good news sends it rocketing upwards, and same with surprise down bad news, like makes it plummet. Yeah, I mean, not much. Don't expect much. Yeah, yeah. They need to make more campaign contributions. Oh, by the way, so on this topic, Steward, and speaking of political stuff, like and the palms being greased and all that. So some of you might not know this, but there's a guy named John Boehner. He used to be Speaker of the House. He is actually on Steward's board of directors, surprisingly. So I think like a lot of the like red tape and stuff, like it seems like they're really well connected. So take with that what you will. I think it's an interesting fact. I don't know how involved he is really behind the scenes or anything, but he is on their board. We talk about it mostly in general or in articles and research. It's 2 channels. I think you can keep up. I mean, maybe it's just we talk too much and it's too many messages to read, but like what we're doing is like we're reading like the actual gigantic, PDF documents with and sifting through all of that to find the key takeaways and then discussing those key takeaways. So like we're honestly saving people a lot of work, who maybe don't have the time to do that, who just want the cliff notes or whatever. I mean, maybe we keep hoping for that anyway. I don't think there was anything particularly negative in the call, except, finding out that Prospect's been paying late is a little bit, it makes me a little uneasy, but, they are on cash basis for a reason. And I mean, let's not take anything away from the fact that the performance of the stabilized portfolio, I mean, it sounded like most of those operators are doing quite well and should be able to pay the current and increasing rents going forward. They do have CPI-based escalators, so rents probably will increase 2.5% to 3.5% each year. So being stabilized and just not, bleeding off or having to sell off too many assets, they can gradually move up their funds from operations just from those rent increases. So that's a good thing. But this pain right now, tough to navigate. Yeah, I mean, honestly, I think Delaware is probably a little overrated, but amongst the other cesspool East Coast states, it's the only one I would ever consider opening, an LLC or a corporation or whatever in. Like, why would anybody bother with like a Massachusetts corporation or a Connecticut corporation with how they are. Unless like you're only doing business in that state. But even still, like, why would you want to do business in those states? Well, I mean, not really set up to do that on today's stream. Yeah. But I would also like to just take this moment to remind everybody to please think of the bondholders and pray for them. I'm surprised none of the analysts on the call asked about how the bondholders are doing. Yeah, that's okay. That's okay, Steve. I really, so just to be really clear, I don't think this is for everyone. It's ridiculously volatile, and yeah, it's definitely like going to test you emotionally if you're in it. Like, a lot of people think that they're not emotional investors, but that's because they've bought like the Magnificent Seven and have only known going up and to the right for most of their investing journey. But you see them experience a stock in their portfolio drop 10 or 15% for the first time, and they start freaking out. That's where I live, man. So, but I mean, it still affects me. It's just like, but it's like, oh, I've been here before. So yeah, I guess you could say it's 50-50, but I really don't think it's like a 50% chance of 0 and a 50% chance of 15. I think it's a much smaller chance of a 0, but how much it ends up being at the end sort of depends on how well they can preserve value right now. Right now, MPW is not about growing value. It's about preserving value long enough for the share price to recover to meet that value at some point in the future. And to do that, they need to preserve as many assets as possible while delevering as much as possible during a major tenant bankruptcy. So, like, it's not easy, but they have, I think, a lot of high quality assets with which to make that happen. It just depends on whether they can or cannot. And so far, I think they're showing that they can, use these, again, very attractive assets to do what they need to do to delever and survive. And if they survive, it's going to be closer to a 15 than to a 0, I think, from here. Now it could end up being, 12 or 13 or something like that instead of 15 by the end of it, because just, maybe some of the assets end up being, sort of written down. Like, they own 9.9% of Steward. Like, realistically, what's that worth at the end of a Chapter 11? What is it going to be? What they paid for it, or probably not? Probably not. Just being real. So that's what I would like to see, like, and also focus more on Europe. Like, they're doing really well in the UK, and mainland Europe. Seems like those overseas hospitals, it seems like they don't have a lot of the same problems they're having, and it's probably just because those countries maybe have better healthcare systems that are a little bit more efficient than our weird, janky Medicare, Medicaid, private insurer, and uninsured / underinsured hodgepodge of different stuff. It's like somebody walks into a hospital in the US and it's like a mystery as to, what the hospital can charge or will get paid on that until they figure out the billing and stuff on the back end. It's a huge drain on efficiency for the operators, I would imagine, having to like figure all that out. Bondholders will be fine. Yeah, I know. It's a joke. So all the short sellers, well, two of the Fraser Paring and Robinson keep tweeting about the poor bondholders. Like, what are you like suddenly caring about the bondholders? Come on. Like they were mad about the dividend getting paid because, but think of the bondholders, they're not going to get their money now. And it's like, guys, you care about the dividend because shorts have to cover it. Come on. Yeah, so a rate cut or rate cuts would be really nice. In fact, on the personal side, I have a condo about to go under contract that I'm buying, and I would really love for some rate cuts over the next year or two so that I can refinance and not be broke making that payment. That would be great. I have no other debt, but like it's gonna be a tough nut. Oh yeah, they do have some properties in Portugal, don't they? This is our resident Portugal analyst here, doing that boots on the ground due diligence over in Portugal. Under $3. Yeah, I mean, I did get some comments predicting a $3 price point again. Yeah, I'm like, and that's the thing. I try not to make like specific. It's gonna drop to this price by this time. Like, I literally don't know. I don't know anything about flags or triple crosses or any of that stuff that people talk about. I don't know. People start talking about their chart reading, and I just kind of my eyes roll into the back of my head, and I just kind of like drool a little bit. I don't know. I mean, that's a take. Jeez, you'll have some explaining to do here with your wife if you do that, I think. But no, that's not. So you got to be careful with the words they actually say and what you think you're hearing. So what I heard them say, and this is paraphrasing because I'm not looking at the transcript of Q4 right now, but they were saying that they were expecting something to the effect of the Steward situation to be resolved or for rents to be paid on those facilities, something like that by June. Like the implication was that things would be sort of figured out one way or the other by June. Now, it's interesting that they said June and then the Chapter 11 happens in early May. So it might be that they expect the rents to be paid on those hospitals by different operators by June. You know what I mean? Like, so I don't think they may, I don't know if they said Steward is recovering. I don't think I heard that phrase, but I could see how you could hear them say that they expect it to be like resolved by June or something. And for you to hear, oh, so Steward is recovering. But I don't think that they used that phrase exactly. So in these earnings calls, there's always sort of like, they're careful with their wording, right? But it does come across like a little disingenuous and whatever, but there's a reason for it, right? If they say, well, we think Steward's going to go into Chapter 11 and we'll have it figured out by June. You said, what about a Chapter 11? And the stock price collapses. So, yeah. Yeah, it'll be small and disappointing. And who hasn't experienced that at a time or two in their life? Yeah, I mean, maybe like I feel like I understand like the concept of a trend and of support, resistance, a moving average, and whatnot. Like conceptually, I understand those things, but I don't feel that I would be advantaged necessarily by like trying super hard to implement them. Yeah, that is true. So if you look through the bankruptcy filing, like the bidding process for like a lot of the hospitals, the first sort of round of that, a lot of the deadlines for it are June. So in a sense, yes, like a lot of it probably will be sort of figured out and ironed out over the next few weeks, I would think. Now that it's actually under the supervision of the courts and in Chapter 11, I think there will be more progress. I think it was getting jammed up a lot more because, well, Steward wasn't in bankruptcy and it wasn't being supervised by a court. Now it's like, oh, they're in Chapter 11, and even those state regulators in Massachusetts and whatever have to contend with the fact that if they don't play ball, it goes into Chapter 7, and potentially hospitals close and everything is just liquidated for pennies on the dollar, and maybe those hospitals never reopen. That would be almost as bad for them as it would be for MPW if that happened. So you want to think people will be rational, but yeah, they probably yeah, because those advisors, like that guy that's the quote unquote chief restructuring officer that actually submitted the whole Chapter 11 thing. I think he was brought on like months ago. So it would seem to me, if MPT's been getting weekly statements, which they confirmed in the call, by the way, that they're still getting from Steward, and this guy also was on board. I think they brought him on in January. It might have been December, and we just found out in January. I can't remember which. It would seem that they've probably been aware that this and working on this behind the scenes this entire time. That's my sense of it, but I can't say that for an absolute fact. So, I mean, profitable is such a weird word to use, because if we're talking about GAAP, it doesn't like GAAP isn't even really a good metric, because they're doing all these write downs and stuff, but their funds from operations was 24 cents per share. So by that measure, they're technically profitable. But by GAAP, yeah, because they've done write downs and things of that nature, yeah, that sends them negative on GAAP. But I don't think any REIT out there generally goes off of GAAP to determine whether they are quote unquote profitable or not. So again, precise language. So they did say that a lot of things would be weighted towards the back half of the year. So that's kind of what I was thinking as well. Like probably September will be good. I think that's, let's see, see, May. If they release their next quarter roughly the same time frame, there'll probably be an earnings release in late July or early August, and then another one in the fall. And that's when we'll probably have a clearer idea. I mean, honestly, the next one that happens in late summer, I think we'll at least have a lot more clarity on the Steward part of the equation, which hopefully there'll be something good. Right, that's correct. They're just writing down assets like that's. It's like basically money that's already they're already kind of. It's like it's money that they already spent in the past. It's not like it's not a cash expense in the present. Correct. And even if they they write down like rent or whatever that they're owed from Steward specifically, right? With this Chapter 11, depending on how restructuring and asset liquidations go with Steward, they might get some of that money still. It's not impossible. Yeah, that is correct. So the net loss is GAAP, and the normalized funds from operations is the accepted measure for a REIT. So yeah, okay. Yeah. Yeah, so yeah. You would hope that the write downs aren't ongoing, right? Yeah, and that's actually what I was just saying. Just because they've written something down, basically doing a write down on something that they're owed is basically just reducing expectations, but they are still owed the money, and it's, while I won't say likely, but it is possible for them to still collect on it going forward. So it's like it's a paper thing. It's like a loss on paper, but they're also still owed the money. So it's just basically their way of saying like stuff's kind of rough and we're not necessarily expecting to actually get it, so we're writing it down now. Yeah, so a lot of it does depend. Like in my mind, the biggest thing is the retenanting of the Steward hospitals and any Steward asset sales and what they get out of it. That's the big thing for the next few weeks to months for sure. Yeah, so the master leases do make that that rent into a secure claim, and actually it's actually the advantage that MPT has in this with regards to their claim on money from Steward during the bankruptcy is so, from my understanding, and I'm definitely not a lawyer. A lawyer wouldn't come on stream and talk about earnings in a tank top, but it seems like it's so egregiously slanted in the favor of MPW that the asset-based lenders and other creditors have tried to object to how good those terms are for and favorable it is for MPW, which in a bankruptcy is not an ideal situation by any means, but in the event of a bankruptcy, you want the other creditors to be upset about how good your position is relative to them, I would think. So again, take from that what you will. Yeah. Which it's annoying also that they're both a secured and unsecured creditor and equity holder. Like they definitely they got in definitely a bit too deep with Steward, but I also think before 2020 especially, it probably looked like Steward was pretty unstoppable. Like healthcare operators, I think were probably seen as pretty stable, safe to do business with. So a lot of things changed though. Yeah. Yeah. A lot of it is secured and yeah, so and some of the money MPW lent to them is specifically secured against stewardship. I mean, it's only like 80 something million, but definitely want that stewardship thing to go through. Yeah. So stewardship, this is why I keep saying stewardship. Like I wanted to hear more about that, or at least them to mention it or something. Or I don't even think any of the analysts asked about it, which again, I'm always like a little disappointed with some of like there's some questions where it's like almost repeats of previous questions and it's like new topic, please. But I mean, I'm not an analyst, so I don't get to ask questions. Yeah. So, and there was a previous instance where a tenant had a bankruptcy and they are collecting on that on that rent in that situation. So, they've actually it was a smaller version of this same situation they've dealt with before, basically. No, not at all. Thanks a lot, buddy. That deal already closed and they already had the cash. So basically, and it wasn't a straight sale for 1.1 billion. So what they did is they sold a 75% stake, formed a new joint venture with what was it? They set up a giant multi-billion-dollar private equity firm, and then got 190 million in secured financing against the remaining 25% stake that they hold in that joint venture, for a total of $1.1 billion in liquidity. But it wasn't a $1.1 billion sale. That would be inaccurate. No, I know it's not bad. It's not bad. I mean, I'll milk this for all it's worth. You know what I mean? But I'm not in it for the money. Honestly, I wish we could get a bankruptcy attorney into the Discord for the due diligence. That would help. Yeah. So, yeah, I mean, I'm pretty much right there with you, Judicator. We've talked about this at length already about the bankruptcy and everything like that. That I think the Steward Chapter 11 and how that's navigated is probably going to be the most critical thing, both for preserving value for us, the shareholders, as well as the stock price. I think how that plays out will be probably the biggest X factor for how the market views this stock. Now, if those retenantings of Steward hospitals and assets like stewardship get sold and suddenly money starts flowing back into MPW, I do think it eliminates a lot of the ammunition short sellers have of why this is bad and yada yada. Yeah, I mean, I'm in it for the bondholders. I really deeply care about bondholders, you see. Yeah, exactly. I mean, pray for the bondholders, guys. It's true. Pairing could do with a diet, though. Yeah. One could say it's 50-50 because either they do or they don't, right? If there's two options, it's always 50-50. But yeah, I do think it's not 50-50, and it's the chances that MPT goes under in like the next 12 months is almost like it's very close to zero. Like it's a very, very small chance. And as that timeline extends out, like shorts are paying interest on their positions and paying the dividend. So at some point, it becomes unfeasible to continue to bet on this being a zero. And they'll move on to probably ABR because that's the latest sort of special project I'm seeing them tweet about. I mean, yeah. I mean, and here's the thing, right? Like they've one of the shorts has actually commented on my stuff before, and he'll always just like fire off all these rapid fire bullet points that are super obscure from years ago or just things that are like completely random that I don't know where they're getting this stuff from really, but it seems as though they want to focus on like Malta and the bondholders and fraud and all this, when I think the real issue is, hey, we've got higher rates that make multiple things harder for a REIT. We've got a couple of big tenants, especially Steward, distressed. Steward's in Chapter 11. That's not wonderful. And yeah, I mean, they could result in some erosion of value for shareholders, but MPT itself, I don't see them going under just because they have so many assets, and it seems like the valuations are pretty attractive. I don't know, but I'm not going to sit here and say, oh, it's all good. It's not all good. Even though I hold the stock, right? Like, I'm not going to say like everything is great and this is for sure a grand slam or anything like that. I feel strongly that it's a good value, but doesn't mean everything's good though. You don't get a discount on assets this steep without some kind of trade-off. There's got to be something distressing the stock. Yeah, so the 2026 debt cliff is like 2.5 or 2.6 billion, something in that range. It's close to that. Now, that could be tough. 2025, it's like 1.5, 1.6, something like that. And if they can do one deal for, 1.1 billion worth of liquidity, I would think they can navigate 2025. I'm like reasonably sure of that. 2026, especially if there's not any kind of a rate cut or anything, 2026 is a little tougher. Yeah, I mean, technically maybe, but it would get close though. We might see the share price hit like $1 if that happens. But if they defaulted, they would themselves probably be forced to try to do a Chapter 11 or something. And but as you know, bankruptcy is not the same as going to zero, because you still have assets and liabilities, and it's just you're more or less forced to restructure and or figure out how to offload those assets to settle liabilities, but it's in a way where it's court supervised and you have certain protections in place. But it's not good if it's definitely not good if you're at that point. But I don't necessarily think MPT will get to that point even in 2026. After the next div and the first rate cut. Yeah, I don't know. The first rate cut, well, a rate cut would help the stock price almost surely. It would make asset sales better. Like they would be able to get more for what they have. And yeah, it would be just all around positive for the stock. But I don't know. The Fed is being kind of stingy because of inflation. So, but the good news is that inflation, which is the CPI basically, is also what determines how much MPT raises their rents. It's easy to forget that, but the rents do go up every year. So like if they do end up having to like refinance some of their debt at a higher interest rate later, and it's a year, 2 years, whatever down the road, the rents will also on, the remaining properties have at least gone up. And if they've retenanted Steward properties, that's 20% of their portfolio that wasn't really paying them anything that will be paying them. So the chances they can get through that are a lot better, I think, after this Chapter 11 gets situated. But it's a lot of variables and moving parts and layers and stuff. I honestly, when I first got into this, I thought it was a lot simpler than it was. So, yeah. I mean, my outlook is just that it is a mispricing right now to the low side. I honestly thought it was a mispricing when it hit like $10. Like, granted, a small mispricing at the time, but still, it was it was a discount for sure on book value. And in normal circumstances, they trade at a premium to book value, a slight premium. I like the conviction. Yeah. And I know that they well, here's the thing. They could also lose REIT status if they stop paying their dividend. If a per REIT rules, they have income that is that would otherwise have been taxable, because it's 90% of their taxable income that they have to distribute to avoid the double taxation of a normal corporation. And in some cases, it's actually maybe a good idea to just do that. Like, forget about your REIT status, just go back to being, go be a regular corporation and retain cash. There's an argument to be made for that, but I do think that would definitely hurt the share price if they decided to do that. And it took them a while to get their REIT status approved in the UK. And so like they probably would view losing REIT status as a big step back, considering like how much effort it took to get it. Okay, so you're like the one person I found with a cost basis a little bit higher than mine. I think I'm getting close to $6 because I keep throwing a little bit more in here and there. And I'll just kind of keep like probably very, very slowly piling on until my cost basis and the share price intersect and I'm in the green again, and then I'll just let it. But that's assuming that happens. I don't know. There's no guarantees or free lunches in this life, but yeah, I mean, I think it's probably like, I mean, and here's the thing. Some people bring up fast graphs, Chuck. And, he has been, and I don't know if he's put anything out recently, but he's been saying like, oh, it's worth $18. I don't buy that valuation, to be honest. Like some people do, but I think, like, I really think it's like, and like my initial take on the valuation was like maybe 14, and it could be now that it's like more like 13 or something like that, because hey, like there is some distress going on, and there's definitely some valid reasons for it. So like I think 18 is a pretty optimistic valuation, and that I don't even think a multiple of FFO even really makes sense right now as a way to value it, because they're having to actually realize the value of their assets in order to pay down debt. So I think it makes more sense to go off book value right now. I hope that logic sort of makes sense. No. To be blunt, I think they can only start raising the dividend again if like rates dropped a lot by 2026 and they could refinance that 2.6 billion like way into the future, like 5 or 6 years into the future, and like do it for like 2% or something. Then maybe they could start thinking about raising the dividend. But if they have to sell a bunch of stuff to pay off that 2.6 billion, they're not going to have the rent income coming in to raise dividends, realistically. Yeah. So no, I don't see a dividend increase anytime terribly soon. Yeah, although I guess you could make the argument that if they're not receiving rent, that's yes, they only have to pay out 90% if they actually receive money, but I also don't want them not receiving money. Yes. And I also there was a discussion on Discord about this. I don't have the accounting background to tell you if these write-downs affect what is or isn't taxable income, because it's all like kind of paper expenses, and they still are owed that money and could collect on it later. So I don't know if the write-downs affect the taxable exactly. It may, like, I don't know why they would do the write-downs at this point if it wasn't reducing their taxable, to give them the option to maybe skip a dividend. Like, that's the only reason I can think of like why they would want to do the write downs, unless it was just to lower expectations. Oh, another person at 7. Okay. I mean, I definitely should have picked up more when it was like $3, but I was I was feeling some pain when that happened. Started at 13. Okay, so I think when it was 13, like, it was pretty close to fairly valued, right? And I think it would be reasonable, with all the stuff going on, that they experience a temporary discount. So, yeah, I mean, honestly, I dipped my toe in at first when it was like 10-ish, and then it actually recovered a bit. And I think when it recovered back to like 13 or so, I saw that you could sell puts at like $12, and the premium was absolutely insane. And I got a little greedy with that. So I ended up assigned a few shares like at a higher point than 10. And I was like, darn it, I got greedy with my options. But then, like, as it, kept falling lower, I was like, well, I mean, this is a pretty steep discount. I think it's worth like 14. I can average down. And I've stuck with it because I don't think the value has changed all that much. Maybe a little, but and partially some of the difference in value I've received back in dividends anyway. So because you have to factor in total, you know, and I don't drip, so I receive the dividends and then consider what to do with the cash. Oh yeah, so yeah, and I don't have anything against him, but it's like, he pulls it up in his, um, I mean, essentially what I saw, like, he kind of pulled it up in the chart and was like, oh, the fundamentals look like it's still valued at $18 or something. But it's like, pretty sure that's based mostly on multiples of FFO. And yeah, I just don't know if I really agree with that as the best way to value it right now. I mean, Joseph Hoag's in it too, I guess, for what it's worth. Although, like, a lot of what he buys, I really don't agree with. But most of YouTube's negative about this stock, so I guess I'll take my allies where I can find them. Yeah, I'm jealous of that cost basis, Steve. Very jealous. Yeah. Last I checked, that could also be true. No, I don't have nearly that many. We have somebody in the Discord with over 60,000 shares, though. Yeah, I think you're using that correctly. I mean, in spite of my youthful exuberance, I'm actually kind of an old man. I'm 36, so yeah. I mean, I think like in general, we both, Chuck and myself, would both agree that it's under its fair value or its intrinsic value, whatever term you want to use. And it's just, I think his number is like a little bit inflated of what he thinks it's worth. Like, I don't think it considers enough of the negatives. And hey, maybe my number doesn't factor in enough in the negatives. I'm saying like, initially my value was 14. I don't think it's changed that much. Maybe it's 13 now. Maybe it's 10 now, like, or maybe after this chapter 11 with Steward or whatever, maybe it'll be 10 or 9 even. Like, the thing is, though, that with a low enough cost basis, hopefully you've got enough margin of safety that even if some of that value erodes, you'll still do okay. But if it's a zero, no amount of margin of safety will help you, I guess. Yeah. Yeah, I know a lot of people are still super enthusiastic in building the positions pretty hard. Yeah, no, I as time goes on, I tend to experience more and more of what I call like old man problems, where it's like, dang, I always thought my parents were exaggerating when I was a kid about different things, and it's like, I guess they weren't. It does kind of suck, but I'll fight the sands of time as much as I can. I don't know. I think if things are going well in the next few weeks, I think they want to keep paying the 15-cent dividend. I think they realize that any deviation from this will absolutely just wreck the share price. So, yeah. 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 There are some people out there that have real conviction and the guts to back it up. I have a certain level of conviction, but I also, I think having literally all of your eggs in one basket, or no matter how good that basket is, it could still be dropped, But I do actually think I want to have more concentration into maybe like, I think something more on the order of like 6 to 8 things that I'm pretty strongly convicted in versus more things that I've just kind of added just because. So, yeah. So no, they can't do a buyback in lieu of a dividend because the tax man is smart, and ordinary dividends, like what REITs pay out to investors, are taxed at our regular income level. They're not taxed at long-term capital gains level like qualified dividends are. And share buybacks are only taxed at 1%. So in no universe would they ever allow that. Yeah, so I do. So so I will address like the so-called dividend investors. I think if you're buying this only because of you see the high yield or whatever, that's the wrong reason to be buying MPW stock. The dividend is the wrong reason to buy it. However, that is still a good. I don't know the exact proportion of the investors that buy it specifically for that dividend, but I know it's enough to where if they get quote unquote scared out, it will definitely have a big effect, at least temporarily, on that share price. And yeah, I don't think that that's the right reason to be buying it, but there's people on We the Khmer's channel buying yield max options funds for the sticker price of like 80%, 100% yields that they think are real and sustainable and going to let them retire with like 30K. And if somebody's willing to make that, they'll definitely see the yield of, I don't know, what's the yield right now on this, like 15% or something. There's definitely people probably seeing that being like, oh dang, that's paying a lot. Realty Income's only paying 4.5%. This is clearly the better income, and not consider the fact that just because you've got a yield on paper of whatever percent doesn't mean that is good to go in perpetuity. It's a shocking number of people who don't understand that. So actually in when was it? I think it was in late 2022. The board approved a buyback program. It was 300 million or 500 million or something like that. And it was just a 12-month period where they were authorized to use that much money for buybacks. They didn't really use it, but it was there. So they can do buybacks. But I think they authorized it more as like a bluff against the shorts, because the short reports and stuff were coming around that time and intensifying. And so they probably thought, oh, well, what would scare away short sellers? Maybe if we authorize a buyback program, they'll kind of stay away, because they'll know that we can if they do short it, we can do a big buyback and like really screw them over. But they didn't really use it, and the shorts still sold short, and here we are. Dang. All right. Oh yeah, in lieu of the dividend, no, they can't. They can't, because it's an income thing. It's the specific purpose is to avoid the double taxation of tax at the corporate level, then taxed at the personal level when you receive the dividend. But the exchange of that is it's ordinary income. It's not qualified. It's not long-term capital gains. It's just income, and it's real income. It's income, not yield max. We the Khmer's income. So after probably sometime in the next handful of days, I will do a shorter video regarding kind of the key highlights of this. But the thing is, this earnings call didn't have much information that was new if you've been keeping up with the bankruptcy. But yeah, it'll be like 5 or 6 minutes probably, and you'll get some bullet points. So okay, so 13.5% yield. So I think, no, correct me if I'm wrong, but I think the dividend cut, they've only paid on it for 3 quarters. So Robinhood may be using trailing 12 months and still have one of the higher dividend payments in there, maybe. That's just me randomly coming up with an explanation for that. And Fidelity is probably just using the current level and looking at forward. So yeah, if it's not 80%, it's not income. So, okay, guys, I think I'm gonna wrap it up here. I've got stuff I have to do today. I'm trying to get a condo under contract, so I need to check and see if my realtor's texted me or anything. So, have a good one, and in the next couple days, I'll try to get something out short, sweet, to the point, bullet points. If you guys didn't get to listen to the whole call, and also, I hope everybody grabbed those gifted memberships that were given out earlier, because yeah, it's free. Free is the best price, and you'll have a little star next to your name anytime you comment or anything, as long as you have that membership. And I do try to prioritize responding to members because, hey, you guys are supporting me financially and allowing me to justify to myself why I spend so much time doing this. No, the call is over. What I'm saying is, for those of you that weren't able to make the call today, like, because some people are just joining like in the last few minutes here, I will, for anybody that couldn't listen to the whole call, release something. Bro, I don't know, like, you'd have to go up in the chat and click on it or something. I don't know if they've already all been claimed or not. I don't know how to check any of that. Like, I'm a complete novice when it comes to any of this studio stuff. So there have been a total of 6 gifted throughout this stream here. So like, scroll up and like tell me if they've all been claimed or not. Yeah, they're up a lot further in the chat. The big dog himself. So the guy I mentioned that has 62,000 shares. Correct me, Leaf. Yeah, no, I mean, definitely scroll up and like try to click on it or whatever and tell me if there's still any left to redeem or not. Like, I don't know if I end the live, if people can still go back and claim those, and I would hate for Well, I would hate for anybody that wanted one to miss out, and also I would hate for me to miss out on receiving the revenue from them. So, and not to mention Google. Has anybody thought of them and the revenue that they get from those memberships? Think of Google and how much they need the money. Come on. As they say, well, I mean, you missed the conference call, but no, you're good. I am about to think of the Google bondholders. Exactly. Think of the Google bondholders, guys. Come on. Claim those memberships. The Google bondholders need you to do that. They won't be able to eat if you don't. Okay. Oh, now the Philippines is somewhere I particularly enjoy. Even though I got like basically deathly ill the last time I was there. It wasn't. I'm pretty sure I caught it from somebody at my office like the day before I left too, because there was somebody came up to talk to me and their voice sounded like really like they just spent the last few days coughing their lungs out, and then halfway into the trip I'm like really riding the struggle bus, and I'm like, great, fantastic. I just paid a couple grand to go overseas and be ill. Fantastic. Vegas, the Philippines. I mean, we could do a multi-stop tour. Also, Leaf, are you game to? We're gonna start our own company called Grand Poobah Research, and we're gonna buy like a bit of a, maybe not quite a mansion, but like a pretty nice place in Vegas, and we're going to headquarter Grand Poobah Research in Vegas, and it's going to be amazing. But we're going to do this with our MPW winnings. We're going to all agree to invest like 10% of our winnings into Grand Poobah Research headquarters, and then we're going to we're going to do counter research on the companies that get really massively shorted that we think won't go to zero. And I'll release all kinds of videos and stuff on them and social media posts and the rest of it. And yeah, it'll be an amazing adventure. And it'll be in Vegas, and it's going to be just fabulous. And I'm like half joking, but like if anybody wants to do that, hit me up. No. Like I didn't get sick again. I'm just talking about when I was over there and everything, the stuff you guys already heard me complain about on Discord at length. And the reason why there was like a multiple week gap in me uploading anything, because I felt like I was dying. I mean, I think I'm good. I feel fine. But yeah, it was definitely alarming how long stuff was lingering and everything with that. Yeah. Oh, all right. Leaf is in. All right. See, we're trying to get Judicator in. He's reluctant. His wife might not let him. I think that's what it really is. Yeah, if when it comes to this, if Leaf's in, I'm in. You know what I mean? I mean, I haven't seen too much with regards to like the share price movement has been pretty today. And also like it just, yeah. Oh, hey, we're up to 4:59. So I guess people were worried about what was going to be in the call, and now they're less worried because it's popping back up a little bit. So, yay! That like 13-cent price movement represents like $20,000 of gain for Leaf. So. It's not that much. I'm exaggerating a little bit, but so yeah. So no. So they said that it would be they wouldn't discuss it until the 30th, I think. So they're not paying another one in 20 days. They didn't want to be. I think they're playing it with the dividend quarter by quarter. That's the indication that I'm getting from how they addressed it or didn't really address it. If they were confident that they could just keep paying it going forward, no matter what, they would be like, yep. What the hell is Traveler's Pee-poo? I mean, yeah, we should I mean, I'll be doing the world's biggest victory lap if it pans out for sure, because of like the fact that we've really had to earn it and go through the roller coaster ride. I'm not sure if it was, they said a board meeting. It's something. They said it really quick, like while I was responding to like the previous thing they said. And so it's difficult when you're trying to like live react to something, like while you kind of have to try to say stuff during the boring points, and they'll slip stuff in there sometimes. It's an art. But yeah, we were not going to hear anything about the dividend for at least until the end of the month. That's what I was gathering. Yeah. So, they'll discuss it on it's the annual meeting. Okay. Thank you for the clarification, Jordan. I had a hard time catching that one. They really slid it in there. Yeah. Oh, what was even the question? The guy said it was something just no. It was really funny though. The analyst came in with like a question he clearly had been rehearsing in the mirror all morning, and they're just like, no. Okay. Yeah, I mean, for like, I've listened to a few of their calls, and this is like, it's kind of just how they do them. He wasn't a fan of the no. Well, I mean, goes to show you, like, I remember the no more than the question. I don't even remember what they were saying no to at this point. I'll probably have to go back and check. But I think it was something we wouldn't have wanted them to say yes to. So I guess that's good. So, all right, I really am going to call it now, though. I will, those of you on Discord, I'll see you there, and have a good one, everybody.